Hello and welcome to a brand new episode of ET Market Smart Talk, a show where we talk about market trends, investing, yarn, as well as techniques on how to become an effective investor as well as trader. Well, my name is Siddhartha Bhaiya, and today we have with us a very special guest, Siddhartha Bhaiya, who is the Managing Director and Fund Manager of Aequitas Investment Consultancy Private Limited. Now, Siddhartha has over 20 years of experience into equity research and equity fund management. Now, Siddhartha's multi-bagger and contrarian stock picking approach helped Aequitas deliver more than 30% CAGR returns over the last 9 years. Now, definitely we'll be talking about his strategy and a lot more in markets in this segment, so stay tuned. Well, without further delay, let me call the man himself. Welcome to the show, Siddhartha.
Hi, thank you, Kshitij, and it's a real pleasure to be on the show.
Thank you so much.
Thank you for the wonderful words.
Thank you so much for your time, sir. Now, you're a chartered accountant with more than 20 years or 2 decades of experience in the capital market. So what attracted you the most? Is it the money or the inquisitiveness, that you have about the company?
So a couple of things, Kshitij. Anyone who tells you that they are in the markets for anything other than the money are lying.
Okay.
You come to the stock markets to make money. So let's, so when it started off, right, and a lot of chartered accountants, once they clear their exams, they want to get into the markets. Very few actually end up pursuing that. It's a very difficult market to get into. But I was very clear the day I cleared my CA, I wanted to be in the markets because I wanted to make money. Luckily for me, I had the opportunity to read Buffett and Lynch and got inspired by them. And I thought that there you can make money, through hard work in the stock market. So clearly, yes, that was the beginning point. Second, at some point in time, you have to evolve. And right now it is about, creating a track record, making a name for yourself. You outgrow money at some point in time, right? Money becomes a barometer for success.
Sure.
So yes, to begin with, yes, it was all about money. Today, it's more about creating mark.
Wonderful. Now, there's this debate in the market, luck or skill, which makes you a better money manager. What are your views on that?
I think, Kshitij, any profession, you can get lucky for a little while, but long-term success totally depends upon scale.
On the skill, yeah.
Right. So in the end, you could make, like, say, if you started investing in 2021, you had to throw darts and pick stocks and you would have made money. That was luck. But if you really want to make money over a period of time, you will need skill. It's like Sachin Tendulkar's track record of 20 years, right? It was, you can't attribute that to luck. Right. There was a lot of skill involved. Yes, there were times where he got a very good ball on first ball and he got out for a duck. But there were also times where, a number of times luck play. So luck, you get both sides of the break. You get a lucky break and you get bad breaks. And in the long run, it evens out, whether it's cricket or stock markets. What matters is skill in the long run.
Absolutely. Now, why we try to put up this question is because there are a lot of new investors, who sort of entered in during the COVID era, you could say in 2020. And, so 2020 to 2021 would have been a wonderful year when both equity markets, or at least, Sensex and Nifty delivered brilliant returns and many stock turned multi-baggers. Now, the 2021 to 2022 seems to be rather volatile, and now the volatility is sort of ongoing. So there I would, wanted to make that distinction. So 1 year you made that profit or you made that alpha. Next year was slightly more challenging, and now the challenges sort of continues because of a lot of external factors, be it war, and we've seen COVID, which was unthinkable. Now we've seen the war as well, which was unthinkable for at least quite some time. So more from a retail, investor's perspective, while we're coming from, and you sort of pointed it, in the right perspective that yes, probably 1 year was luck, but now you need the skills to make that kind of money. I hope I put that right.
Yes, 100%. And you have to understand one thing, even as professionals,
sure.
Okay, there are times where we make money, not because of skill, but because of luck.
Right.
And there are times where we lose money while our skill will be perfect or reasonably be perfect, but you get a bad break. So you also need to distinguish between whether you made money because of luck or because of skill. Right? That's a very, very important this to understand. There are times where we lose money, but at the end of the day, there was nothing wrong with the process. It's just that something happened in the future after we bought the stock that made the decision go wrong. So that's got nothing to do with your skill, but more to do with your luck. And there are times where you make money because the market is booming, like 2021, and it didn't require any skill. Right?
No, absolutely. And now that we have you on the show, wanted to pick your brains on the current market environment as well. Do you think that was factored in?
I think too early, Kshitij, too early, right? We had too many excesses globally, right? And nobody wants to hear that. Everybody wants to hear saying that, oh, there's going to be a bull market, because everybody likes to hear good stories, right?
Yes, yes.
And but the fact of the matter is, look, we had 10 years of very low interest rates. We had 10 years of unbridled money printing. Heading into 2021, you had too many excesses, whether it was cryptos, NFTs, NASDAQ, the IPO boom in India, the unlisted space in India, valuations, 100p multiple stocks. So I think there have been too many excesses, and I think there's going to be a course correction in the stock markets. I see a pretty long winter for the stock markets, to be honest with you. So
right,
it's going to be a narrow market from here on. Probably a new set of stocks that will come to the fore, but a lot of people are going to burn their hands badly.
Right. A genuine answer to that question. And you didn't, sugarcoat anything. And that's what we like, so our viewers should get the actual, the element.
I don't want to, this, like, a lot of people have been swayed to the stock markets because of low interest rates, because they were not getting any yields in any other asset class. Right. And most of these people came in the last couple of years, while 2021 was great. 2022 has been brutal for a lot of stocks. So I would really want to see if interest rates go up. I see a lot of money moving back from equity markets into fixed deposits and real estate and gold, the traditional sectors where Indians have typically tended to invest.
Very important point there, Siddharth, that you pointed out, that some part of money is moving towards the, you could say the risk off sentiment, which favors the risk off sentiment rather than the risk on sentiment. So rupee at 80, so how does the life change for investors, companies, as well as for FIs?
Oh, it's tough, right? It's going to be tough, because the more your currency depreciates, the harder it becomes for the government and the central bank to control inflation.
True.
Right? Because a lot of our inflation is imported inflation, predominantly crude. So tough as an Indian, typical Indian, if the currency depreciates, your relative wealth keeps on deteriorating. So it is bad, but good for a lot of manufacturing companies, particularly which are focused on exports. Right. So demand for exports so while we are bearish on the markets, there are a lot of sectors which we are bullish on, one of which is exports or B2B manufacturing. I think those are companies which are going to benefit from a falling currency. Right. So nobody wants a depreciating currency, but that's what it is. And the biggest impact, the biggest downside for us is crude. If crude goes up any more from these levels, the currency could be for further pressure, could be in further trouble.
Right. So all eyes on crude oil, which sort of have the maximum or major component of our import bill. But now that you are here, and we've also talked about this earlier in the session. So what is your multi-bagger approach to investing, and throw some light on that as well?
Oh, Kshitij, it's very, very simple, not complicated, right? There are three cornerstones to our multi-bagger approach. First and foremost, we focus on, it's a combination of value plus future growth plus a contrarian approach to investing.
Okay.
So our first mantra is buy value, value, value. Right? If you're going to buy value, in the long run, it's going to be very difficult for you to lose money.
Right.
Right. Look at which stock is making a 52-week high today, ITC. Right. It represented a lot of value at 180, 190 rupees. It was available at 12, 13 times earnings. Right. So with a lot of cash on the balance sheet. So picking value in the long run is never going to harm you or this. In fact, that's the only way to make money in the long run, right? Second, and most important, is growth. Again, growth is futuristic. What has happened in the past is irrelevant.
Right.
We've seen that with a lot of commodity companies where they were something like an Hindalco was available at 0.1 times market cap to sales, right? Crazy at one time EV EBITDA. Then came in the growth, aluminum prices went up, realizations went up, profitability went up, right? So future growth is important. Historical growth is already captured into the stock price.
Okay.
And third and most important is a contrarian approach to investing. Right? Contrarian doesn't mean doing things different. It does not mean doing the opposite of others. It just means doing things differently from others. Right? So whether it's Coal India, whether it is Larsen and Toubro, whether it is ITC, they all just represented contrarian bets. Whether it is Mahindra and Mahindra today, it's the auto sector, right? Auto sector, look at it, 5 years, virtually no returns. 3-4 months back, everything was negative. Oil high, commodity prices high, EV disruption happening, interest rates high, semiconductor shortage. But the only thing that favored was valuations. And now a lot of those things have course corrected. So,
in fact, whatever could go wrong went wrong in the auto space.
Went wrong for the auto sector, right?
Some time back, and now yes, most of the stocks are hitting 52-week high. And case in Mahindra and Mahindra, you already pointed out. In fact, that stock has been on a tear, you could say that so far in 2020.
Yeah, and it was completely contrarian, right? Nobody is talking about it. Nobody was talking about Mahindra and Mahindra. I don't know about anyone coming anywhere on any of the media channels or Twitter or anywhere coming and saying M&M looks good.
Yes. No, I completely agree on that. And golden words from you, value, growth, contrarian investing, 3 pillars to multi-bagger approach. That's from Siddharth. And finally, very interesting question and my personal favorite, and I'm sure a lot of our new investors would also want to understand. So what makes a company good or bad? A company that has created wealth in good times, or the one that stood firm amid bearish sentiment?
So I'll typically tell you what, in our approach, we buy industry leaders. And one trait that we see across industry leaders is, it is companies which do well during bad times are the companies which are more resilient. It is fund managers who do well during bad times. You would want to invest with them because everyone does well in a boom time or in a booming stock market or in a booming industry. The more reckless you are, the more money you will make. Right? As Buffett says, it's only when the tide goes away, you know who's swimming naked.
Naked, right.
So yes, we always love to buy companies which do well during bad times.
Right. So golden words on that. Well, on that note, thank you so much for your time for that. And that's all for now, folks. So do stay logged on to market.com for more on news, business, and economy. Thank you so much for your time, sir.